What's going on, guys, and welcome back to another weekly forecast and review. My name's Dion, and today I'm going through the Aussie dollar. But before I go through what I think is going to happen next week, I'm just going to play a short clip of the only trade that I took on AU last week. Alright, so we closed the trade out for roughly 50 pips. I think it's like 49.5, but yeah, we stopped at the 0.7766. So I did plan for the trade to go further down, but I didn't really like the way it rejected the last low. So it is making higher highs and higher lows from this last area where it picked up lots of strength. So yeah, it rejected the 0.718 fib retracement level, so I didn't like that, so I took the trade out. If it does form some sort of pattern over here to suggest a like sort of break, retest, and continuation, then I'll probably take the sell. But honestly, right now I'm thinking about longs. I'm just having a look. I feel like price could go long into this area where it has more strength if it didn't have enough strength to sort of break through there. So I reckon it could come up there, gather some power, and break back down, and that will sort of form like a break of this ascending trend line that I can see right now. Okay, so now that you saw what happened last week, I'm going to go quickly into what happened this week. There's not too much to say. I'll break it down real nice and simple and keep it nice and clear. So we saw a strong rejection from the 0.8, which is a strong psychological level. You can see here, it touched it and came all the way back down. And what it did was set up this zone here, which is a strong area where we see price reject. So the three boxes that you see now, those are my areas where I've seen price respect the most. We see it around here, around 0.76. We see it here at 0.77, and we see it around here in between 0.785 and 0.79. So I trade based on how price respects or breaks these levels. Currently, the most recent touch that we've seen was from this zone here, the 0.785. We see a strong rejection to the area. We had 2 weeks in a row where we couldn't crack it, and now price is making its way lower. Last week, price closed below the weekly level. It's a significant weekly level where price, you can see, reacts to. Now, when we close below there, what it's telling me is that price couldn't hold its strength above, so more than likely we're going to see price making its way down. To further add some more confluences to my bearish bias, I'm going to quickly go over it again. We see the rejection to the 0.8. After that, we saw a low, then we saw a lower high, and what it looks like now is we may be setting ourselves up to see a lower low. We already have the lower high, and we have that rejection from the 0.8. We see a somewhat of a double top formation here, which, is that lower high. And now over the past 2 weeks, we've cracked below the main level and just touched into this region here where 0.77 is. So now we'll go into the daily time frame just so we can really see what's happening. The 0.77 is acting, or it's behaving the way it usually does. As you can see over here, even the 0.77, if I was to drag this across, price was clearly rejecting this area. That's why I drew the box so wide, because the key level isn't a specific number, it's a zone, it's an area. And right now this area is looking like the wall that is stopping price from continuing down to 0.76. If we do get a strong close below 0.77, it's highly likely that we will see price make its way down to 0.76. And if we're following the downtrend, it will need to make a lower low. So it would actually need to break below and close below 0.76. So this leads us to where we are now. Our most recent sort of bounce from a significant level, like I just mentioned, was 0.78. This area, we can see clearly 1, 2, 3 days in a row. Price could not keep itself up, so we saw a strong sell down, and then that's where we saw this rejection with this candle here. Now, price made its way up, and what you can sort of see here is a pattern, actually. This sort of looks like a head and shoulders pattern. So I'll put this in a different color so it's a little bit easier for you guys to see. So you can see here, we have the left shoulder, we have the head, and the right shoulder. And here's the neckline here. So I'm not placing any trades until I see maybe one of two things. My bias on AUD USD has been bearish over the past few weeks. So if I'm entering any short positions, I would like to see price break below 0.77 and close. 0.77 is, if you're subscribed and you watch my channel, for AUD USD, 0.77 is definitely an area you need to pay close attention to. You can see here by the price action. You can see here by the price action over here. 0.77 since the beginning of the year has been a very significant area. So I'm not going to sell even if I see price make its way up on the shorter, smaller time frames. Even if I see price create a lower high and reject the weekly and start making its way down, maybe in that case I'll short 2.77, but I'm not placing any sort of longer swing trades until I see price clearly close below 0.77. So yeah, one short trade idea is this. I'll go into the smaller time frames. I'm going to head over into the 4 hour. So we saw a very clear, strong push past the weekly level. This is the break. I haven't really seen the retest yet. So should there be a retest, I would look for something like this. It's 0.77. Something along the lines of this. So should there be a retest, we'll see a strong rejection to this area, therefore creating a lower high. And from this lower high, I would like to see a lower low. The low being this area here, which is the 0.772. So just for some further confluence, something else which I will look for in this trade is the Fibonacci retracement. So assuming this is the low here, which is 0.772, assuming that's the low, you can see this is the golden zone here, and I'll quickly draw that up for you. So if price does stop at the low of 0.772 and we see a rejection from there, I would really like to see price make some sort of rejection to this area. And as you can see, it does kind of line up with the weekly key level. The 0.618 lines up well with the weekly level. So that's like a double confluence for me. If I see price pull up into here and show me a very strong like daily close or an 8-hour close, 4-hour close at the least, then this is sort of the setup I would take. So say we see a rejection, say something like that. So there. 0.15% trade. I would probably make my stops. I will probably dollar cost average this trade over 2 trades. So I'll do something like this. I will have 2 positions. The entry is not so exact to what you see now. It will be depending how price rejects this area, but I'll probably have 2 entries and probably take this, and I will actually extend my profits down to past 0.77, just in case we do see that strong push through that level, which it could happen. So overall, what I'm looking for AU is a retracement up to the weekly level / this Fibonacci I just drawn on, and then a strong bearish movement from there. So I've gone through all the confluences that I've sort of seen so far, the head and shoulders, the lower highs and the lower lows on the big time frame, and on the smaller time frames, as you can see, even from this area. High, low, lower high. It's not so much creating lower lows, I would say, but I feel like this looks like you can even draw a trend line on here, honestly. Break and close below the trend line, that could be a signal in. Not saying it is, but it could be. So that's my whole thesis and ideas on AU. Now to further back up my ideas and why I think this, I'm going to go into the dollar index. Now, quick reminder, or if you're not subscribed to my channel, if you don't watch my videos, or if you're new to the Forex market, the dollar index is inversely proportional or inversely related to AU, which means when the dollar index rises, AU falls. When AU goes up, the dollar index drops. So you can see here, AUD USD. So the dollar index is just that second part. So of course, if that second part is going up, it means the dollar is going down. Just quick explanation. So we'll do the same thing. This one will be nice and quick. This is the idea that I have from the dollar index. So the reason why I'm feeling like I've got this bearish bias on AU is, as you can see, I'll go into the smaller time frames. It's because I feel like this area of liquidity is very strong. I think it's more obvious in the weekly. This area of liquidity is very strong, as you can see here. Multiple rejections, and that's where we got our upward movement. Now, on the last week, we actually did have a strong rejection to that area also. And now, yeah, that's all it is. We saw that rejection. We did not form a lower low. We actually formed a double bottom. So, continuing the trend, we are looking for a lower high. And where is price going to go to collect orders to make its way down? The next significant level above it, which is the 92. You can see I have it marked in the red box. For me, the red boxes are significant levels. That's why you saw on AU, 0.8 is in that red box. And these orange boxes is just more, they are still significant levels, but not as strong. So, double bottom, rejection to this support. My belief is that we could see some bullish movement to come and collect orders, create the lower high, and then we'll see a big pullback to the downside. So translating that movement on the dollar index, it was first the bullish movement, then the bearish leg. The bullish leg and then the bearish leg on the dollar index, if we reverse that, that would be bearish and then bullish for AU. So that doesn't exactly line up with what I'm saying, because that would mean that price is going to drop down. There might not be a retest, but that's the thing. There may be a retest because the dollar index may make some intra-week, intraday moves just to collect some liquidity before making the move. And I'm applying that to this. So go through the charts yourself, have a look, try and understand what I'm saying. For example, if we see here, price needs to go up before going down. The dollar index, we need to see it go down before going up. So if we don't even see enough strength, if price can't clear this last high on the 4 hour or these larger time frames, 4-8 hours, if we can't see a break past this high, so this downwards movement could be coming down to collect orders before making its way back up to create that longer lower high. So that is what could be making AU come up for the retest of the weekly level before dropping. Anyways, that's my whole forecast and review on the Aussie dollar. I hope you guys really enjoyed this video. It felt like a good one to film, in my opinion. I felt like I hit the points I wanted to. Nice, clearly, very concise. I feel like it's easy to understand. But if it's not, please leave some comments in the comment section. Give me some constructive feedback or whatever. What would you like me to talk about more? Would you like me to include more fundamentals, or do you like this style of technical analysis? Do you like how I compare these two charts together, AU and the dollar index? Or would you like me to talk about gold as well? Because gold is it is relative to AU, like they move very similar. It's not inverse like the dollar index. So, with that being said, that's it for today. It's Sunday night, it's 10 p.m, so I'm going to get this out for you guys. Hopefully it helps you out with your trading week. And yeah, enjoy the rest of the night, and I hope we all have a good trading week this week. So, catch you guys in the next one.